All right, thanks for joining us here on a Friday. It is a holiday shortened trading week, and we're going to take a look at what's going on in your markets. Because it's a holiday shortened trading week, I wanted to remind you that shifted all of our weekly USDA reports back one day, 24 hours. And so that means today we actually get our weekly export sales numbers from USDA. They normally come out on Thursday, but we got them a little bit ago. Here to help us talk about them, let's go to the phone and let's talk with Rich Nelson. He's with Allendale Incorporated in McHenry, Illinois. And Rich, as you take a first glance at these export sales numbers that have come in this week here, what's your first impression on some of the numbers?
You know, I got to say, we're a little surprised here, especially with the soybeans, these numbers which really kind of stood out to us. This weekly sale on soybeans, old and new crop combined, over 626,000 tons. That's actually a record amount for this previous week in any of the previous years. So the fact that we're still shipping out these or making these incredible sales in the face of talk of China cancellations in the coming weeks, definitely an amazing feat we're doing right now on soybeans.
All right, the wheat numbers seem to be fairly strong there. You look at the range of estimates, 50 to 550,000 tons, and the wheat came in at 781,300. Now, it is important to note that the near-term delivery period on that was a marketing year low. Almost all of that was shifted to the 2017 and 2018 marketing year, right?
That's certainly right here. And this was a concern here for us with this relatively lackluster new crop procurement pace. And as you mentioned, new crop for wheat starts as of June 1. So this is very important now as we watch this transition from old crop to new crop. So on this new crop, like I said, we're finally getting some sales put back in there and maybe easing some fears on this new crop export picture.
Of that corn total, where we see 551,800 tons noted on the screen, now that's combined between this marketing year and next. The portion of it for the current marketing year of 2016-2017 is 412,100 metric tons. That was down 10% from last week. Does that concern you very much or not?
In the big picture, it's not too much of an issue here for us. In order to hit USDA's goal, we need about 166 million bushels from now through the end of August to meet USDA's current goals, and those are relatively reasonable here. In fact, it's a bit under last year, and last year, of course, we had that odd marketing pattern due to the South American problems, but we do think we'll be able to hit the numbers on corn. Soybeans, like we said, we're concerned about the potential cancellation still in front of us. There's a large amount of unshipped, but for right now, we're okay there. And as far as the wheat side, like I said, we're happy to see USDA changes, certainly on the new crop side here for the wheat side.
Looks like the biggest buyers of the corn would be Japan and Mexico this time around. Excuse me, maybe Taiwan as well. On the soybean side, unknown destinations. We had Japan as a big buyer there. Mexico also in there in the mix. We also had overnight news that USDA said we sold 200,000 tons of soybeans to Spain. And I guess that's not going to hurt the market open here this morning, is it?
Certainly shouldn't, and definitely, I think in terms of the just general running news flow this morning, maybe we'll see this positive trade from the overnight discussions move into the day session as well. So happy to see this here too.
Let's take a look at our overnight Globex trade if we could, and we'll run down the corn and soybean trade and wheat markets too, so everybody can see how we traded overnight. On the grain side, we had July corn firming up 2 1/4 cents at last check at 372 3/4. On the soybean side, here we have the July 3 1/2 higher now at 915 3/4. Remember, the corn and soybeans turned around and closed lower yesterday, so they're rebounding this morning. And the wheat trade in Chicago, we have that July contract 2 3/4 higher early this morning at 431 3/4. Kansas City wheat, we had July overnight trading 3 3/4 higher at 434 1/2. And Minneapolis wheat, which had run away from the other two exchanges yesterday, was up only 3/4 cent. And in the cotton market overnight, we had the July contract down 38 points at 77.25. Rich, I'll bring you back here in a little bit. I'm going to get your thoughts on that explosive action that we saw in the livestock trade yesterday. Limit up moves in cattle, you know what that means. We'll talk about that when we come back. Let's continue our conversation with Rich Nelson of Allendale Incorporated in McHenry, Illinois. And we were just talking about the export sales numbers that had come out on the grain side this morning, and wanted to talk about the livestock side here as well. Now let's take a look at our livestock summary from yesterday here, Rich. We did have a moderate to, well, I'll call it a fairly active cash trade develop out there in the plains. The market was established in a range of 133 to 137 per hundredweight. Now that was definitely firmer than where it had started earlier this week. The rest basis sales wound up being about 212 to 216 per hundredweight yesterday, so that was several dollars higher than what we had seen last week. And boy, that was definitely reflected in the futures trade. We had limit up closes in live cattle and feeder cattle yesterday. So, Rich, I guess my question to you is, what do you expect to happen here today to wrap up the week when we had, I guess we're looking at expanded limits now on live cattle and feeder cattle, and that also means expanded margins. I want to remind everybody, is that going to scare some of that investor money away from the livestock trade today?
Certainly has a possibility, but I'd say for right now, as far as the open and first half-hour trade, you've got to assume maybe a good $1 to $2 higher discussion as far as today on these fats. Feeders may be up a good $1.50 to $2.50 off the open, so we think at least off the open, some strength here today, and wrapping up the week on a firm note. Maybe next week we'll probably see some second thoughts.
Now, we had export sales reported on the weekly report this morning for beef and pork as well. And looking at the beef number, we had a total of 12,100 tons this time around. That was actually bumped up significantly from last week. It was up 69%. Now, the pork actually backed up a little bit, but it's still 13,800 tons, metric tons this past week. Now, it was down 22% from last week, but it's been on quite a tear for export sales recently on the pork. How do you read those numbers here this morning?
We do call this on the beef side definitely a little support of this number. Definitely a best number in 4 weeks, and a good rebound after what we said was some concerning issues in the past couple of weeks, at least on these sales numbers. So good to see this rebound on the beef side. The pork is maybe a little disappointing. Lowest going back since the week ending March 9th. So the strong export sales discussion for pork maybe not lasting as we go into this early summer period now.
All right, Rich, I want to get your opinion on something twice this past week here now. We've had that hog market actually trading up around where it was the day before, if not a little above it, but closing lower. But yet it was it closed above the previous day's lows. So yes, it was a lower close. It was a turnaround on the close yesterday, but do you consider that to be bearish or not? Because it still seems like it's maintaining that uptrend on the charts.
And no, we're not going to get too excited here just yet. The issue for us, in our opinion, is the fact that we're coming up to the June 14th expiration of futures, just I believe about 8 business days away here. And this market still needs to see a little higher cash hog in to get this futures price met. So lean hog index roughly about 77. So we still have a few more dollars to make on this cash hog side. And also seasonally, we are looking at buyers procuring for the end of the month needs, which is only a slightly lower demand period. So we agree with prices being up here, but perhaps getting prices pushed back above this $81, $82 range might be a little tough in the very short term here.
All right, thanks, Rich. Appreciate it. Rich Nelson of Allendale Incorporated in McHenry, Illinois. So there you have the stage is set for the livestock trade today, and we'll get everything off and running officially here in about 5.5 minutes.
All right, thank you very much, Marlon.